Rule number 10. Uncertainty creates conviction. I want to read a quote from Mark Douglas. Thinking, assuming, or believing you know what will happen next creates an unrealistic expectation in a specific outcome. That is a very powerful quote, I find. Thinking, assuming, or believing you know what will happen next. We all do that, whether consciously or unconsciously. We all have to have a level of belief in a specific outcome to put money on it and risk losing it. Or at least we think we do. It's actually much better when you don't know and you accept that. But to begin with, as a trader, and even many experienced traders and investors in general, they feel like they have to know what's going to happen next before they'll make a trade. Assumptions are huge in crypto. It's like you see it all the time. It's, oh, well, can't be the top. We haven't had a blow off top yet. They assume there has to be a blow off top, Oh, fear and greed index is at 20. It must pump. Well, no, it can still go down 5-10%. The assumptions are what will kill you in crypto. Thinking you know what will happen next is, it's not great, but it's not as bad as assumptions. Assumptions are really bad because they imply complacency. Believing you know what will happen next is delusion, in my opinion, where you see somebody saying, oh, it's definitely going to 53k. Really try and take the assumptions out of your mental model. Most people are smart enough to understand that they cannot know what's going to happen next. They don't truly believe, like they wouldn't go to their grave fighting over it. But everybody assumes things about the market. Everyone. Because it's more of an unconscious thing. When you're in a trade or when you're getting into a trade, you will make certain assumptions because that is your brain trying to justify to itself why you should make the trade. A good example would be if you're in a long, what do you do when you're doing your analysis? If you're already in a long, if you're in a swing long, the first thing you go and do is you go and check all your favorite data points that confirm your bias. One of the big problems with on-chain data is that the whole on-chain data influencer space, I'm not saying on-chain data isn't useful, I'm saying the on-chain data influencer space on Twitter and on paid newsletters and things is all skewed with a bullish bias, and they only get likes and retweets and clicks and subscriptions when it's bullish. So it skews them to pick out and cherry pick the data that is bullish and then using that as an assumption of why the market's going to go up. But by now you should know that trading is not about being right and wrong. I would say there are two words that don't exist in your trading vocabulary from this moment forward. Alright, just delete them. You either have a setup or you don't have a setup. You either take your trade or you don't take your trade based on your rule set. You execute or you don't execute. There really is nothing deeper. There's no magic formula. There's nothing. There's nothing but execution. So fuck right and wrong. The title of this rule is Uncertainty Creates Conviction. It might seem a bit contradictory, but uncertainty is not bad. In fact, you can harness that and turn it into a superpower. If you accept uncertainty as a fundamental truth within the market, which it is, it's fundamentally true that the game is one of chance. It is not one of defined rules. There's no defined rule that can tell you a specific outcome will happen 100%. There's always an element of uncertainty. I go back to the example of nothing can stop a whale from dumping 1,000 BTC at the market at any point, which will affect price. By harnessing this, you can forgive yourself immediately for losses because you understand that it wasn't you being right or wrong. It was just a game of chance. It can also help you stay cool after wins, provided that you followed your system, where others in the market who don't have this knowledge that you're now equipped with, they will dwell on the past losses and they will get euphoric about their wins. The obsession with knowing what happens next is how both fear and euphoria manifest. Think about it. Why do you feel fear when the market's dumping? That's because you are getting yourself in a spin, you're racking your brains trying to think, and you're trying to position yourself in the future in a worst case scenario when it's dropping and saying breakdown from 30 and I'm going to have to capitulate, liquidation points at 28 or 27 or whatever it may be. You're not accepting the chance that Bitcoin could go up. Euphoria manifests because the same thing but flipped, where you're certain the price is going to go higher. If things are going down, everyone thinks they're going to keep going down, and the market sort of manifests that to a certain extent. And when it's going up, it feels like it's going to go up only forever, and it sort of does manifest that because people don't want to sell and they get out of the way. But that only continues for so long. And so that's how the euphoric side can manifest, because in crypto, everyone is so conditioned to massive gains that when it gets to 60k, they don't think, should I sell at 60? They think, all right, let's get it to 70, let's get it to 80, let's get it to 100. And that's the obsession with knowing what happens next. You don't want to sell at 65 because you're obsessed with the fact of what if it goes to 75, 85, 100. So you get that FOMO, You feel like if you sell at 65, you're gonna miss out on the move to 100. You get euphoric and you get greedy because you're obsessed with knowing what happens next. Now, if you had a system and you accepted that the market can do anything and the system was saying it's a good time to sell, then you just sell. But to do that, to follow your system, you need to know that you have no control over the market. When you accept that you have no control over the market, you can execute without fear, and it will breed 100% conviction, because the only thing that will matter is your system, and your system will tell you what to do. It's easy to have conviction. You're taking the discretion out of it. You're taking the certainty out of it. You're saying, no, I don't know if it's going to happen. You'll see me in the group when I'm talking. I tend to talk in probabilities. I might say a certain percentage chance of this trade working out or an occurrence happening. Even just something as simple as, I'll say, I think we go to 53k, or my best guess is that we go to 53k, or probably 53k next. I avoid, and I try every day, and it's one of the key focuses I've always had as a trader, is to avoid speaking in absolutes. Nobody's perfect, and from time to time you do speak in absolutes, but as a general rule, you want to remove those from your vocabulary as well. You never want to impose your opinion on the market and say, Bitcoin's going to all-time high before December 31st. You're just painting a target on your back, and not a target as in other people to attack you, because most of you are not putting your views out to thousands of people to be lambasted. You're just trading against yourself. You're just thinking in your own head. You do all this analysis and you let your confirmation bias get you to such a point where you think, I know that Bitcoin's going to 100k, whatever, plan B said so, and stock to flow. You can get yourself into such a state of naive belief that you will not actually be able to execute, and you're then not a trader, you're then a hodler. You're just a moon boy, essentially. Nothing wrong with that. Hodling has made people millions, but you're watching this because you want to be a better trader. Trading and holding are totally different, okay? The very nature of trading is anti what the hodlers do, and anti what holding coins long term is all about. So unless you're one of the rare ones who can flip between the two, just focus on being a trader, and you can trade over any time frame. This is a scalping course, yes, but the concepts apply on all time frames. You don't have to be a maxi holder who holds coins forever. I'm going to hold for 5 years or nothing. You could just say, why don't you say I'm a position trader who trades over months long time frames? Why would you not buy it at 30 and sell it at 60? Say you had bought it at 30 and then you sold it at 62, 61 after the top, when it looked like it might be a top, and then just see what happens next. Because there was plenty of indicators, there was plenty of things saying, there's plenty of metrics flashing, telling you that that was a good time to buy and a good time to sell. And that trade played out over 3-4 months. So why would you feel the need to just be an endless holder if even the most basic bit of education can make you better at trader, and then you can buy your coins back cheaper? And that's what it's all about, isn't it? So bit of a side tangent into the general side, but everybody here will hold coins long term as well. You don't scalp with 100% of your trading portfolio. You scalp with a smaller part of it. So always a good thing to keep in mind. Now back to the short term and the uncertainty creating conviction. You need to remember that by taking a sample size approach, like we mentioned before, over a large number of trades, you're going to learn that a certain percentage will win and a certain percentage will lose. Nobody has a 100% hit rate. And your only job is to tweak and refine your methods until that ratio of winners and losers reaches a level where you can produce profits on a consistent basis. Right? It's not about knowing the future, it's about making money regardless of any one single future outcome. Alright? If I give 99% of people, if I gave them one trade and I guaranteed them, say I'm a magic genie, you can pick one trade that you know will play out. I'm going to give you one future outcome. I'm going to tell you exactly what's going to happen to Bitcoin in the next 30 days. And you can take one trade based on that. Even if I give people that, within a year they'd be broke again. So knowing the future does not guarantee success. You would whittle it all away. Whereas there's somebody who understands the uncertainty that's inherent in markets and takes a sample size approach and never gets given that trade. I don't tell them what's going to happen in that 30-day period. They just continue chugging along, trading like a professional, and over time their equity curve goes up and to the right, and they end up rich by default. With discipline and survival in the markets, you will become rich by default. Rule number 11, defeat yourself to become profitable. There are broadly 3 stages of trader, like as I see it. At the beginning, you know nothing. When you first start trading, you think the market exists in a vacuum, right? You think it's all about using the correct indicators, the right chart patterns, drawing the lines, support and resistance, and that you simply have to just press buttons whenever your charts, patterns, indicators, lines tell you to, and that you'll just collect your fortune. You think it's a game, but not a game in the sense that it is. You think it's a game in the sense of a casino, that it's just you and this flashing screen of lights and candlesticks and green and red buttons, and that you press it and make money. Then, as you get wrecked a few times, you learn it's a bit deeper than that. The first thing that amateur or new traders learn is that it's a PvP game, right? So obviously that means that there's somebody on the other side of your trade. Believe it or not, a lot of people are not aware of that when they first start. Most people aren't aware of it when they first start, even though inherently to have a market, you must have a buyer and a seller. But a lot of people don't know that when they first start, but it's one of the first things they realize. So they usually realize that whenever they get stopped out, tired excuse for a bad trade, because then they think, oh yeah, I didn't lose that trade. Somebody tackled me and stopped me out. So then at this stage, at stage 2, you think that for you to win, someone else must lose. So this is what's known as zero sum. You might hear of it being called as a zero sum game. Technically, it's a negative sum game, but that's not something that's worth getting into. Zero sum means that for you to win, someone else must lose. So most traders get to this level and stagnate. Eventually they get eaten up by the richer and smarter players in the game. Because if you get stuck in that mode of thinking it's you versus the market maker, you're never going to win. The market maker has billions of dollars of capital, tens of millions of dollars of proprietary software and data that you couldn't even dream of having, decades of market knowledge, insider information, a deeper understanding of how markets work than you, lower latency, they're closer to the actual exchange, everything. And so you get wrecked, going too far ahead of yourself, and you're trying to battle the wrong opponent. But there is a stage 3, which is what everyone should aim for, and what a lot of people don't know, and you guys will know at the end of this. But actually the traders who become profitable, and I've seen this over and over and over again, is that every one of those traders who becomes profitable, they all realize that the only barrier between them and consistent profits was them, right? So for you, the only thing stopping you from being consistently profitable is you. Even though it may be someone else on the other side of your trade, it's you who blows up your account. It's you that fucks it up with risk management, execution, poor emotional control at key points. Alright, getting stopped out on a trade where you leave your stop loss in the correct place and you don't move it, that is not going to destroy you as a trader. In fact, that's just moving you one step closer to being a professional trader, because you followed what you should do, and if you can have the discipline to continue doing that, you will eventually figure it out. Your opponent doesn't make you move your stop loss when you know you shouldn't. He doesn't make you close the trade early instead of letting it run the target because you're afraid of pulling back. Your opponent, the market maker, whoever, they don't make you capitulate at the bottom or buy in at the top in FOMO. It is truly you, and only you, that you must defeat to become a profitable trader. You'll hear me talk a lot about how trading is a game, a lot about game theory, and about how it is about thinking about the other person's moves. This point does not contradict that. In fact, this point proves it. You need to first master yourself, and then, to become truly elite, you can worry about your opponent. That's why the game theory element that we're going to dig into comes after the rewiring your brain. You need to rewire your brain first before you even begin to think about your opponent. So they're not contradictory. You need to master yourself just to become profitable, and then you can take things to the next level. You're going to learn these things side by side, but just remember the order of importance. And becoming profitable isn't always enough. You can become profitable and just be barely profitable, but being profitable puts you ahead of 90% of traders. And if you can do that, then you can take it to the next level. And that's why it's not just enough to master only yourself. You can't just have monk-like emotional control and make millions in the market, because there's a broader game, there's a meta, there's a bigger game going on there. It's not just about you never moving your stop loss. But for 99.9% of you, the problem you are facing at the moment, and I guarantee it, absolutely, I've spoken to plenty of students, I've been there myself, at the start, your problem is moving your stop, closing trades early, capitulating the bottom, buying the top, not knowing about risk management, not knowing about position sizing, trading too big, trading even too small, trading with outsized risk and reward, just those basic things that are nothing to do with anyone else but you. So get those in check first, and then focus on the bigger game. Alright, so that's Module 1.2, rewiring your brain to trade successfully, wrapped up. Now we move on deeper into the psychology of markets as well as people within those markets, and we are going to move to that next stage of game theory. Game theory is one of the most exciting and interesting and challenging parts of all of the markets, and you're going to really get a deep dive into what makes the people in the market tick and how you can position yourself within that for success. Alright, so that's coming up next.